Hello everyone, welcome back to the channel. Hope you enjoyed the first couple of videos, so I'm just going to crack on and do my second fun review. Not long now until I'm away to Bangkok, leaving a week. Getting packed, getting excited, and ready to go to take the channel with me as well. So you might see me in better locations than this flat. You'll probably see me with the fund inspector out and about the streets of Asia. Just keep an eye on this channel and you'll find out where I am. Anyway, just got to do the usual nonsense. It makes a massive difference if you just like and subscribe the video. Let's cheat the YouTube algorithm, everybody. And then also, as you can see, my second video, the charity challenge. Get onto that, give it a like. Keep it a bit of a chance for the giveaway. Just give me a follow on TikTok. The portfolio is doing okay. I'll update that on Thursday and you'll see where I am at. And yeah, let's just get on with this. First of all, I would like to say, disclaimer alert, this is just entertainment purposes, it's not financial advice, do your own research, all that nonsense. So let's just crack on with it. Let's just talk investments, baby. Okay. So second fund review I'm going to be doing is the Scottish Mortgage Investment Trust. Now, I know a few of you are saying, oh, this isn't a fund, it's an investment trust. Well, it's still got charges, it's still got performance I can look at, it's still got a portfolio of assets, and it's still relevant to the channel. So I would like to think that it's something I can review, and also it's part of the FTSE, so it is a big household name, and it's one that I think is relevant to review. So this is managed by Tom Slater. I don't know enough about him. However, it used to be managed by a guy called James Anderson, and for you who's involved in the Scottish football game, he sits now on the board of Hearts of Midlothian Football Club. So he managed the fund quite well, and we'll get on to how Tom's been doing. Baillie Gifford is an Edinburgh-based fund, so as you can probably hear, I'm from Scotland, so it's not too far away. And yeah, the fund is well known, and let's just get on to the ratings cards. So first of all, excellent this week is going to be, I've been watching Yellowstone, highly recommend it. It's about cowboys and land. The Dutton family are absolutely brilliant. Give it a watch. It's really good, and there's prequels as well to that I'm going to start watching, 2 seasons, so get on to that if you haven't already. Second, good. Love a happy hippo. I know it's associated with kids, but I think they're brilliant, so definitely in the good bracket. Okay bracket is plain naan. Now it's okay, I think you can upgrade your naan if you go to the Indians, get some garlic or pashari. So it's got to be an okay rating. I'm not against it, I don't think it's bad, but I think if I'm going out for an Indian or getting an Indian food, it's got to be garlic naan for me. Bad rating this week is cricket. Now, I say this with open honesty, you could put a cricket game up on my television right now and I could not tell you what team is winning. I've lasted maybe 5-10 minutes watching it before on the television. Zero interest in it. I appreciate that some people really like it. That's fine, each to their own. But for me, it's a big fat no. Now my terrible rating this week is a little bit different, and it's actually, now I know there could potentially be a foreign audience watching this, so maybe explain this. There's a restaurant chain called Nando's. It's like a sort of, it's not quite a fast food, but it's not a sit-in restaurant, and it used to be reasonably priced maybe 5 years ago. Used to go in and get a meal for about £12. I went in the other week there, and a meal with 2 sides and unlimited soft drinks was £26, ladies and gentlemen. Now, I know there has been a thing that everybody is fully aware of called inflation. Inflation's went up maybe like nowhere near basically 125% over the past 5 years. Nando's is just ripping people off now. It is still really good, which is annoying, and I still will go in it as a treat. Maybe not as often as I would like to. However, the price of it is just unsustainable these days, and even just paying £4 for soft drinks that are basically carbonated water and mix, it's not ideal. So there's the ratings this week. I've decided this week I'm just going to look at the charges for 1 year, because I was looking across a lot of the funds and most of the time it remained the same. And so just to save a bit of time in the videos, I don't want to make them too long. So the charge is 0.35%. Size of the fund is 14.5 billion. Now I know there's going to be people involved in finance who say, "Oh, what is this? Is this the NAV or is this the market cap?" So this is the NAV. I don't want to confuse people on investment trusts. They're slightly different to funds, but just bear in mind that if anyone who actually cares about that's what we're doing at. So Tom Slater and Baillie Gifford are receiving £50 million a year for managing this fund. Now that's actually really reasonable, to be honest. It is on the exchange as well, so the London Stock Exchange. I think that is pretty good. Morningstar and Financial Times have got it as quite good ratings as well. It's borderline. I'm going to give it give it a 2. Good. It's not quite down at ETF levels. It's not an ETF, obviously, but it's quite good. Borderline excellent, actually. Borderline the old Yellowstone. Now let's look at performance. Now this is a tech fund. It's a high growth orientated fund, so it's going to have ups and downs, which is fair enough. We'll look at the portfolio in a couple of minutes, but from the short term performance over the year has been good. It's outperformed its benchmark by about 8%, which is good. The short term performance is very good. I'm actually going to give it an excellent rating. I would be happy if I put money in that over the year. Now, not so good is the medium term over the 3 years. Now, I'm actually going to bring a chart up of this. We can see here over the 5 years. I don't care about the trending tickers, okay. We can see here that over the 1 year, right, okay, it's been good. The 3 years, look at this. Back in 2021, this was like sort of peak, and it's went down. Because of that was like when inflation started, and because it's such a high growth orientated portfolio. So if you'd bought into this here, you're probably not going to be happy with performance. It was up at 15 quid. It's now at £9.80, so you would have lost about a third of your performance on that. So depends when you bought into the fund, but I'm reviewing it here. So the 3 year figure against the benchmark's been terrible. I mean, that is a Nando's. That's what we call a butterfly chicken burger with all the sides, all the sauces, a couple of drinks and a couple of ice creams. £50 number there. Terrible. So that's what that gets. In the long term performance, it's actually been okay. It's been slightly behind benchmark, so it's going to get a 3. And if we look here, you would have been happy at the performance. I suppose we shouldn't really look at the long term, right? But you know, if you bought into it 10 years ago, then you would be quite happy. It's been about a 9xer. Well, maybe not 9x. Definitely about 3 or 4 times your cash. Peak COVID, it was very good. In hindsight, you should have trimmed down the position here when it was up at 15. Maybe just took some profit on that. However, still been quite good. Right, let's talk through some of the holdings. My favourite part, everybody. As you can see in my charity challenge, I have got a holding on Mercado Libre. I'll probably talk about that stock in my next video when I'm doing the charity challenge, and I'll explain what that is. I've got a weighting not far off that, 6.29%. This is the highest weighting. I like the stock. It's a good stock. 2 for that. That gets a happy hippo. Amazon, solid stock as well. One of the Magnificent 7 as well. It's been a pretty decent enough performer, as you can imagine. 2. Tesla, I'm going to do a video on Tesla, probably in one of the other funds, because there's a couple of other holdings in here I want to talk through, and I'm not going to have a lot of time. I'm only going to talk through 2 of the stocks here, because my last video was a wee bit too long for my liking. So 2 for that. Sorry, not a 2 for Tesla. I'm not a Tesla fan. It's not that because I don't really like Elon Musk anyway. I think it's just overvalued. Its valuation's a bit mental. It's trading well over 100 times earnings, so it's going to get a 4. Tesla's nonsense. What I would say is that the Scottish Mortgage bought into Tesla very, very early. So the guy James Anderson, who was the previous manager, was one of the sort of first investors into Tesla, and that was how the fund done really well, because over 10-15 years Tesla has skyrocketed. So he's done a good job on that, identifying that early. However, at the current levels, I don't like it. Nvidia, right, absolute beast of a stock, is doing really well, obviously. The valuation, people might question, it's very high. It's like 3.2 trill or something market cap these days. But, they seem to be having good earnings all the time, so nothing wrong with that valuation if they keep just earning lots of money, essentially. So, I'm going to give that 2. Right, I'm going to talk through Meatwan. So, this here is it's Chinese, it's a Chinese company, but it's listed on Hong Kong Stock Exchange. I suppose that is part of China, isn't it? So, what we'll do is we'll talk. So, Meatwan essentially, what it is like for the UK equivalent, it's a food delivery service, right? So, it's a bit like Just Eat, it's a bit like Deliveroo, these sort of companies based out in China. So, with China, obviously a massive population. For me, I think now the Chinese government got a lot of things wrong, and the market has reflected Chinese equity in the past maybe two years. It basically completely crashed. Like if you had a Chinese portfolio, it would be down like 50% probably by now. Reason for that is they messed up a lot of the housing. Remember, there's a certain sort of, I'm not saying scandals, but certain events that have happened as well that just highlight that. So if you remember the Evergreen sort of carry on, and a lot of they built a lot of urban based houses, and a lot of people weren't moving into them, so they were a lot of people were sticking to the sort of rural areas. So the economy's not quite been what it should have been, but it's still a massive country, and I still think it's undervalued. I think in the long term, 5 years, 10 years, Chinese equity is, probably it's got to be higher than what it is now. Now the reason it might not be is because obviously there's political tensions there between the US and China, and this is listed in Hong Kong, right? So it's not got the risk of the American listing, where they might boot the Chinese equity off the stock exchange. I don't think they'll do that anyway. But this one here should be okay, and I think the Chinese economy will get back on track. It's too big a country not to. So over the year, it's been very good. It's up 88.68%, and over the 5 years, 32%. Now, the other thing I would mention here is the market cap. It's 886.9 billion. Remember, this is in Hong Kong dollars, so that's actually about 113 billion USD. Price to earning ratio is about 40. That's to be expected, to be honest, because it's a growth orientated stock, so it's not going to be trading down at the sort of lower end of 10, 12. 40 could be a wee bit high. 146, not going to buy into it when it's 89 up. Do think that it potentially could grow, maybe up to about 250. I do quite like it. I'm not going to have it in my portfolio. If I'm having Chinese equity at the moment, I'm putting it in I'm buying a Chinese ETF. I'm not going to go in and individually pick. The only one I have done in my portfolio is Alibaba, but that's slightly different, and I'll talk through that on Thursday. So this here gets an OK rating. ASML, so this is the Dutch company that does the semiconductors. It was flying high, and it had a bit of a pullback because they were basically, I think their CEO came out and said that they couldn't make, they were going to struggle for their sales. So it pulled back, but it's clawed back a wee bit. It's still a good company. So 2. Meta, I've spoke before as well. $620, I think that's it. So okay. PDR, I don't know this one, so I'm going to put NA. And then Ferrari, Yeah, it's been a strong performer. Weighting at 3.5, so you can see here in this portfolio as well, there's not really any major weightings. They're not running that up at 9-10%. They've got it at quite a lot of them, 4, 5, 3%. Ferrari's been a strong performer. Actually, luxurious sort of goods and consumer products have been not too bad since COVID. So when you put that as a 2, and then Moderna, right? So I was actually, when I was looking through this fund the other day, I was going to put Moderna as a potentially a 4 or a 5. I probably still will do that. Obviously, everybody knows Moderna because they were one of the COVID vaccination companies that made a lot of money from their sort of COVID vaccine program. But as soon as COVID died down, well, it's still around, but you've not got that in the headlines as much, and the demand isn't quite as what it used to be, I don't think. So it's kind of taking a tough time. We'll look at the chart. But interestingly enough, yesterday when I was reviewing this fund, it was up. The fund, the stock was up about 12%, and the reason is that there's a case of bird flu in America that somebody's actually passed away from, unfortunately. And they're thinking that Moderna have got products that can treat bird flu, so there's people buying that in the sense that they think there might be a bit of demand for the old bird flu vaccinations. So let's have a look here. So like I said here, over the one day, you can see there it's up 12%. Pre-market it's up 4% again. The market's responding well to that. Now what I'm interested in is this, right? And I think it's so I had a wee look here when Scottish Mortgage bought this. It was 2020. So back then, it was one of the top weightings, and what they should have done is they should have just sold this position off when it was up at 445. When COVID was right at its peak, they should have just get rid of this or completely trimmed down their profits. Now, I've tried to look into this, and I don't think they did do this. It was one of the top weightings high up in the portfolio, but it's now down at 3%. But the reason I think it's down at 3% is because they didn't sell it here, and it just dropped so much in valuation that it's went down so much that it's now not 9% and it's now 3%. So you can see here it's been a bit of a stinker since COVID. I mean, if you bought into it down here in 2020, down at, I think it was down at about $20 when I remember looking at this about 5 years ago, you would have got about a 15xer, £1,000 I got you £15,000. And one of the hindsight's a brilliant thing, isn't it, everybody? One of the best plays would have been just to short this up here and just, you would have made a fortune shorting it. You should have played it in the way up long and then shorted it in the way down, and you would have been sitting with a pretty healthy profit. So here, market cap 18.29 billion. Well, it's not got a price to earning ratio because it's not making money. Like, see here, earnings per share, it's losing money at the moment, negative 5.81. So they've got a target here of $74. For me, no, I'm not buying it. I think it's a 4. Not quite terrible, but overall fund rating, I think it's an okay fund. Now, I would take some of it. I would keep it in the portfolio to cover sort of my growth names. I think it's okay. I'm going to give it a 3. Percentage of the portfolio, people who know me, I like valuations. The valuations, it's actually trading at discount. This is trading at discount, which for the financial professionals will know what that means. So I'm going to, I would take about 7 or 8%. We'll go with 8%. I know that's both my reviews have been roughly the same, but I picked these two because I quite like them. And that is it. That is the review done, ladies and gentlemen. So the usual, if you liked the video, give it a wee like. If you want to speak about anything, just comment on the comment section. Click subscribe. Remember, just keep talking investments, baby. Been the Fund Inspector. This has been the Scottish Mortgage and Investment Trust Review. Hope you've enjoyed it, and hope everybody has a fantastic day.